I thank my friend for his kind words, and the gentleman from Wisconsin now, Mr. Fitzgerald, is recognized for 5 minutes.
Thank you, Mr. Chair. For small banking markets, a community bank is often prevented from selling to a crosstown rival because of a market concentration regulation, even if it might be in the best interest of the consumers. For example, large out-of-market bank may have less interest in local institutions and market conditions. Under current law, regulators are not required to define a banking market for each bank in the United States prior to a merger request. As a result, banking markets are defined as case-by-case basis. I'm not telling anybody on the panel anything they don't know, but every time there is a proposed bank merger or acquisition, it makes, obviously, banking market definitions subject to change, and it also means that some banking markets are currently undefined. Mr. Reuter, if federal regulators were to define these undefined markets, would that provide the regulatory relief benefit to banks like yours seeking a merger or an acquisition?
Congressman, I think the mergers and acquisition manual's up for revision right now. I think the definition of competition in general needs to be reassessed. Not only do you have the issues that you just mentioned, but also fintech. Lots of activity now happens online regardless of the branch location. So in general, what defines a competitive market is much different today than when that manual was originally drafted.
Very good, thank you. While Graham Leach Bliley does not address a consumer's right to access on their own data, Section 1033 of Dodd-Frank grants consumers a right to access a portion of the data held by a covered firm related to their transactions and accounts in a usable electronic format. But again, as you probably know, it's not clear that Section 1033 extends to the agents of customers of data aggregators. Ms. Lee, how should liability be allocated in an event where an agent, firm, or aggregator's negligence results in a breach or fraudulent transaction? Is obvious it's become very complex. I'm just wondering what your opinion on that would be.
It is a complex issue, and it's one that we have called for in our recent comments on the 1033 rulemaking that they just did, is for the supervision of data aggregators, to allow for the CFPB to have that authority to oversee and to understand. On the part of data breach, I think it depends, what we have said is not only do the aggregators be supervised, but where that breach occurs, at what point in the chain of custody of where it occurs. And so I think that we need to take a look at it when we craft these laws to determine who is the beholder of that information, where that breach occurred, and what the custodian of it is.
Very good. Mr. Knight, do you have a comment on that?
I guess one note I would say is that this is an area where, honestly, congressional involvement might be merited, because it does appear that 1033 has teed up some very difficult kind of intransient questions that are probably more appropriate for Congress to resolve rather than the CFPB. And Congress is likely in a better position to weigh trade-offs and take action. So I do think that is something that is worth consideration.
Very good. Mr. Reuter, just a quick one here. I see in your testimony that you didn't think allowing private rights of action as an enforcement tool for data privacy violations really makes much sense. Any ideas on what else could be maybe more effective than that?
I still think using the prudential regulators as the ones that supervise and take care of any enforcement actions if there's an issue is the best way to go. I also think preemption with 50 different states, I have customers in all 50 states, trying to handle something at a state level would be very difficult.
Very good.
The gentleman yields back. The gentlewoman from